Good morning. Today is Tuesday, April the 4th. Right now, the time in Singapore is 11:11 in the morning. Over there on Wall Street, the market continued to edge higher as expected because last week on Friday, the market closed on the high end, and the momentum, as indicated in yesterday's update, was that it is likely to continue to trade higher. But again, increasingly, as we move into a set of price ranges, I think the market will be becoming increasingly vulnerable to selling pressure. And for the Dow Jones itself, I think I've shifted my target range to 33,900 to 34,500 thereabout, and I think the top side here is probably going to be contained within. And I think if the market doesn't break 34,712, I think the market is still vulnerable to the downside. So again, do keep an eye out for top side potential here. And overnight we have the release of the manufacturing PMI and construction spending. All indicates the US economy is actually slowing down, and this is definitely not a good fundamental to be buying US equities because the fundamentals are all wrong. Okay, so of course we still have the banking crisis, they're still hanging over the head, and we have a unresolved debt ceiling that has not been resolved yet, and they only have up to June. So now we are already in April. Not sure why they are taking so long to resolve this very critical issue, because the market is actually watching them like a hawk. So the longer it takes to resolve this issue, the more critical it becomes. Whether or not they can find a resolution to raise the debt ceiling, I think eventually they would. Politically speaking, would be a disaster if both parties cannot agree to raise the debt ceiling. But on the other hand, if they raise the debt ceiling, that will inflame inflation, because the new budget that they are calling for is actually exceedingly large. So that is going to inflame inflation all over again, which is going to make the Fed's job of fighting inflation that much more impossible. So the fundamentals are all wrong. So definitely it's a wrong time to be buying equities at all. In fact, if possible, we should all be getting out of paper assets, meaning to say that we want to go back into tangibles. And because the market is blowing up into this bubble, it's like totally unstable. Okay, all it needs is just one more snowflake, okay, to cause an avalanche. Okay, what they call the last straw, they'll break the camel's back. I think it's not very far away from the critical moment. So do watch out for events such as this. In the S&P 500, we continue to see equity prices based on the momentum that we saw last week continue to push equity prices higher, and that includes the S&P 500. Last night we have a high of 4,127.66, and this is the highest since when? Since late February. So we can see that the price is getting very close to my target range at 4,140 to 4,195. So this range of prices could possibly become a big barrier to overcome. I would be surprised if prices can actually close above 4,195. Okay, on an intraday basis, it may penetrate, but whether it can close beyond this level remains to be seen. So I'll be surprised if it does. Okay, so until it happens, then we take another look. In the meantime, I think the market upside is very, very limited. The one that we want to consider is how strong the market is to look at the Nasdaq 100, because all these talks about the Fed pivoting and having no choice but to cut interest rates actually behind the rush to buy tech stocks, and we are very close to the first quarter earnings season. So that will reveal how badly hit the banking sector is, because the banks will be among the very first to report their earnings. So in the coming days, once the banking sector earnings comes into the open, then we will see how bad is bad, and that could be the catalyst to actually put a stop to this rally that we are seeing since last month. Okay, so we want to see. So Nasdaq for the time being has registered a new high for the year at 13,108. Sorry, this high is actually not traded yesterday. This is traded last Friday. 13,188.8 was the highest traded last Friday. Yesterday we have no new high, but the market still closed basically marginally lower, but basically it is still looking to be wanting to go up. So the top side here I would think will be around 13,720. So do watch out for this barrier here. Okay, and then in the meantime, if the market wants to pull back, there may be some residues buying interest. If the market pulls back to somewhere near the 12,600 to 12,850. I think that will be able to find some buyers here, but I think this is possibly the last hooray in my opinion. So I am not interested to buy. For those who are keen to scalp the market on the upside, this could be the one place you can actually look at. But for me, I think it's getting to be too dicey for me. Okay, over in Asia, we can see that the Nikkei continued to edge higher this morning. We have a high at 28,277.7, and it looks like momentum wise it's likely to continue to trade higher to challenge last month high at 28,735. So between this bracket of prices between 28,540 to 29,220, I think the market is going to be it's going to hit a brick wall here. So be careful about chasing this Nikkei ever higher. Okay. And in Hong Kong itself, the market has not registered any new high yesterday. In fact, this high at 20,721 is like Nasdaq. It was traded last week. In fact, this is traded last Friday, and market is getting very, very close to my target range of 20,800 to 21,100 level. So again, top side is quite limited. I won't be looking to do anything at all. In fact, I just want to stay away from equity if possible. I'm not an equity trader, by the way. I'm just an index trader. But by and large, a lot of people will be influenced by what happened in equity markets to decide that they want to stay in. I think going into the next few months and years, equity market is the last place I want to be in. Okay, over in the in the Chinese mainland equity market, we have seen that the CSI 300 continue to edge higher. We have a high of 4,094.9 this morning, and it's again is pushing on my target range of 4,100 to 4,113. So this very small range of prices could be actually kept any further rise in Chinese equity as far as the CSI 300 is concerned. Okay. Over in energy market, of course, the big news yesterday was the OPEC plus production cut, or rather, I should say, further production cut to bring the total production cut to 3.66 billion barrels, million barrels a day. So this is a lot of production that's missing from the market. So this is going to cause to underpin the market for the time being. But we can see that the high traded yesterday morning in reaction to the news was $81.51, and the market has pulled back. But during the London and New York session, the market did not challenge this high of $81.51. So that opened the specters for another push, for another pullback. If the market can pull back to somewhere near the $78, I think that will be another area to watch out for buying signal. And at the very most, I think the deepest I would think the market will go down to will be somewhere near the $75, but I don't think that will come. I think more likely somewhere around $77.80 to $78.50. I think the market will find a bottom here, and I'll be keen to take a look to buy, because going into the weekend I was actually short the WTI crude, and I actually took a loss at the opening price because my stop was triggered at the very high of the price. So anyway, if the market wants to go up, then so be it. So what we'll do is that we got to go with the flow, right? So if the market gives us a chance to buy at an on pullback, we should buy the dip here. Okay, so I think this market has a lot of potential to go all the way up. Okay, so in fact, I think my near-term target will be at least $84. Okay, so $84 will be at least my near-term target before we see a more significant pullback. We will have to see whether the market can stop at $84. Okay, over in precious metals, right now precious metals is going to be very interesting, because the triangle pattern that I was talking about is now looking to be folding as expected so far. Okay, so we have a high of $2,009.84, pull back to $1,934.35. So this is the widest part of the triangle. The market has done a 5-wave corrective pattern inside 1, 2, 3, 4, 5. So we have A, B, C, D, E, right? So ideally this is the E part. Okay, or the other possibility is that this high yesterday that we saw could be the D, and we may be seeing another pullback here before the market explodes. So the alternative count here is that this is possibly D, and then we have another pullback attempt here before the market rally. If that's the case, then possibly we have to move this breakout point to somewhere near here, and that will bring the market down to about maybe $2,070 thereabout. Okay, so we have to watch how the market evolves. If the market can actually take off from here, that would be great. Okay, that means to say the moment the market breaks the resistance point, it will just fly. Okay, alternatively, it pulls back, and I will have to adjust the D to this new high here yesterday, and then see another pullback before the market rally. So this is beginning to look like a very, very interesting trade, and it could be very, very fast. Okay. Silver, on the other hand, managed a marginal high last night at $24.19. Now we are beginning to see some kind of profit taking. So the corrective pullback is going to be very, very shallow. If the gold prices starts to break the resistance and started to fly, then obviously the silver price will not be able to pull back. It will continue, it will move in lockstep with the gold prices. However, if gold do another corrective pullback to the new E that I just shown you, then there's a possibility market can pull back a little bit. But again, this pullback is going to be so shallow. I don't believe it will come back to $23 for me to buy at So basically, I will have to watch. I would have to place my resources on gold market instead of trying to buy the silver market, because there's hardly any pullback in silver to make it worth my while. Okay, and over the dollar index, we continue to see dollar continue to be on the defensive. Yesterday, last night, as we were talking in the early morning report, the market was actually going up. This is the dollar index, by the way. Market actually went up to a high of 102.73, but by late London trading and into New York trading, the dollar started to unravel to test the most recent bottom here at 101.56, and we have a double bottom here. Okay, so that depends whether the market can actually hold at 105.56. If not, the market maybe do a rebound, and it needs to go beyond this in a very aggressive way to tell me that the market has found a bottom. Okay, so 102.75 is going to be my key here. If the market rebound into, let's say, 102.16, for example, and struggle here and it started to slip below 101.56, I think the market is going to go down to test a 168 before it stabilizes. But on the other hand, the market flies beyond 102.75. That gives me the assurance the market has already hit a bottom here, since we got technically a double bottom here. So we have to watch how the dollar reacts in the afternoon or in New York session. Over in currency, we also saw the same reversal. Sterling was on the way down until the dollar started to slip. And by the way, sterling managed a marginal high at 124.25 here. Now, of course, right now we are beginning to see some kind of profit taking, but it's still too early. But this is a bracket in which I think there's going to be a lot of selling interest going to be accumulating within the 124 to 125.20 level. So again, top side will be quite limited. I still believe that sterling is due for a pull back all the way to 121. Okay, over in Euro, we saw an attempt to rally, same like what we saw in the dollar index. The dollar was actually on the way up until it comes under selling pressure, and of course the dollar unravels. All the other major currencies, as it was going down, also started to reverse direction, but the euro dollar did not quite manage to actually exceed the most recent high, last week high on Thursday at 109.26. In fact, this high was not even able to take out the following week, the following fortnight, 109.30 high. So basically, we have a double top here, very similar to what we saw in the dollar index in terms of double bottom. So if the market starts to come down, I won't be surprised. My target still remains at 107. In fact, if the market started to move in a big way and dollar start to recover in a more sustained manner, I think 105 is even possible. So I'm going to keep all my short position in both sterling and euro dollar for now. Now, the one that actually caused me to be a bit surprised was the Aussie dollars. Now, Aussie dollars recovery was actually quite strong. Okay, for a long time it wasn't able to take out the 0.6760 range, and yesterday it just punched through with no resistance. We're going all the way up to this morning high at 0.6793. So again, this momentum here may actually take the market a little bit higher into the 0.6820 to 0.6870 range. That could be a good range to actually position short, because this is, after all, looks like to me a three-wave rebound, which is corrective in nature, meaning to say that there is a possibility if the dollar continues to reverse and go up, then the Aussie dollars may come back down. But I think the target here, it remains at 0.6565. Okay, so watch out for this level here. Dollar yen is the one that I wanted to sell yesterday, but it missed my target range by just maybe 10-20 pips. My target was at 134.10. Okay, I actually placed an order to sell at 134.10, but the market went up to 133.75 and then support there. Okay, so the market did not go into my ideal price to sell, so I missed selling. So in the meantime, as the market pulls back down, there is a sense that the top it may be already be in place. So for me to continue to sell at 134.10, it will be a little bit unrealistic. I'm going to bring down my selling price to 133.90 levels. Okay, so I hope to sell at 133.90, which is not very far from where it is right now. Currently, the market is trading at 132.80. No, I was saying that 132.90 I want to sell right now, not 133. Yeah, 132.90 I want to sell. So basically, I think this is where I want to position. Just in case the market cannot go much higher, I'm prepared to take a risk to sell at 132.90, just under 133, for a chance for the market to break 129.64. Okay, that means the dollar had to come back in a big, the yen will have to come back in a very, very big way. Okay, we will have to see how things pans out. Now, remember, we are getting very close. Next week is going to be the handover of the BOJ governor job from Kuroda to Ikeda. So we will see how the new governor is going to take this and play with it, because Japan has been stuck in that neutral position in negative territory in terms of interest rate for too long, and it's becoming to be a systemic risk because there is just so much you can hold the line. Last night I saw a report that the BOJ has spent more than $1 trillion just to hold this market together. And how many trillions do the Bank of Japan have? I have no idea. Okay, they spend $1 trillion just to make sure the interest rates do not go up. Okay, because if the interest rate goes up, the JGB is going to blow out of the sky. Okay, so not sure how this new governor is going to diffuse this bomb. This bomb is going to be so huge, it's going to destabilize the global economy. Over in the Canadian dollar continue to slide lower, and now it seems that to call for a dollar bottom in dollar CAC is a bit too early. There is nothing here to hold the market here in terms until all the way to 1.3275. Okay, so basically if the market do rebound to 135.20 levels, that could be an area to sell for a market to retest the 132.75 levels. Okay, so this is about the all that it can hold the market, this bottom here. Now over in Bitcoin. Bitcoin currently is just holding its line. The market has a very strong run up in March itself, all the way to $29,380. So from there, the market has basically going sideways. I think the market is doing this three-wave pullback. The most we can expect the Bitcoin to pull back will be somewhere between $25,660 to $26,330. Okay, so basically I think this is all that you can do before it stabilizes. If it can stabilize here, well and good, then the market can rebound higher. But I'm also prepared to see a deeper pullback, which is at this moment itself a little bit unlikely. Okay, but I still want to leave the possibility open in case the market tests the 23,000 to 24,000 levels. Okay, so by and large, I think anywhere between 25,600 to 26,300, the market should find some kind of temporary bottom. If it can stabilize here, it may give it enough momentum to actually power for a new high beyond 30,000. So we have to watch how the Bitcoin is playing out. For time being, I will not be looking to take any position in cryptocurrencies because I think the legacy financial assets are right now under a lot of stress. Today, I'm going to talk about the gold market again, because last Friday, I did mention the possibility of gold market moving into a triangle pattern, which means it's likely to be seeing an imminent explosive move to the upside. But of course, yesterday, the biggest headline was in the crude oil market because the OPEC Plus unexpectedly cut production, and that caused the crude oil prices to rally massively to $80 per barrel. But that was yesterday. Of course, we can still continue to trade the energy markets. It's still unfolding, it's still developing. But I think the next big trade will be in this market here called the gold market. Now, what you can see on my chart here is actually the spot gold market, the XAU USD, or for the old timers who has been trading gold market like I do, we are called this local London gold for delivery in London, basically in Latin. Okay, so we can see that the price of gold actually rallied all the way in March to a high of $2,009.84, and then since then the market has been pulling back to a low of $1,934.35. So this represents the widest part of this triangle here, which represents about $75.50. Okay, so a triangle pattern is basically a continuation pattern. So the original move is up. So after the resolution of the consolidation pattern, prices should actually move back to the upside in in its original direction. Now, a triangle have 5 internal waves that I mentioned last Friday. You can see there's A, B, C, D, E. So the whole idea is to position a buy position on at the formation of E, since this is a rising market. We want to be buying. So E could possibly be in place yesterday. The low traded was $1,949.83. I actually bought $1,960 yesterday. So this could possibly means that the price is getting ready to explode to the upside. However, after having another look at the price action, I may have to do some adjustment here. Maybe the high here yesterday represents the D. Okay, that means I have to shift my E. For those who have not bought, they may give you another opportunity to buy. And if this is the case, then we could expect another pullback no lower than $1,949.83. So either way you look at it, either the market explode immediately to the upside, or it pulls back one more round and then explode to the upside. Whatever the case of point of outbreak, we should add in $75.50, which represent the widest part of this triangle, as the target. Okay, so you don't have to like be so miserly to actually pinpoint the price at the very, very top. Sometimes you keep a bit of allowance because sometimes market can drop short. Okay, so anyway, this is my update for you. If I am wrong, how do I know I'm wrong? Market continue to trade lower below $1,934.35, and if that's the case, it will just be a simple ABC move. Now, ABC move means market is still going to go up, just that it won't go up immediately. Okay, so either way, the market is going to go up. So just watch out for bull market here. In the meantime, you take care. I will give you another update tomorrow for another product in my daily updates. Thank you very much. Bye-bye.